In the second video for week 1, chapter 1, we'll just be going through some of the exercises or multiple choice questions that you have. First, and by the way, the color-coded cells, the legend is given here as to what they mean. The tan cells are the given data or altered data that I've entered, and then the grayish cells are intermediary or supporting calculations, and then finally the green cells are the final answer. Often happen, by the way, the final answers, green shaded cells also contain formulas as well, or they often do. The very first question, again, I'll use actual data in some cases, altered data in others. In this case, I'm using actual data in the problem. Here that refers to table 1-3 on page 1-4 of the text. You'll need to refer to that in order to calculate the average taxable income per tax return. So refer to that table and be sure that your denominator is the number of tax returns. So for example, average tax per taxpayer for those taxpayers in taxable income under $15,000, as you can see on table 1-3, and it correlates with my formula, there were 33,998,665 tax returns. So that's your denominator. And then you'll, in your numerator, you'll include your tax liability. Now you remember that, and just as a note, the tax liability listed in the table is in thousands. So you have to add 3 zeros onto it when you perform your calculation to what's given in the table. Otherwise, just execute that same calculation for all of the various taxable income levels. The next question, here I have altered the data. This ties with number 20 in the end of the chapter. They all tie to an exercise or multiple choice question or problem in the end of the chapter. But these are the assigned, a lot of these are assigned in Connect as well. So in this case, Margaret earned $15,000, paid $900 of income tax. Mike earned $50,000, paid $3,000 of income tax. And what we're really asking us to do in this question, again, this ties to number 20, is essentially we're determining whether or not this tax rate structure that's used is progressive, regressive, or proportional. But I provided some supporting calculations as well for the average tax rate. This question number 3 in Connect relates to number 24 in the end of the chapter. Here, you get to practice a little bit using the tax rate schedules, how to calculate the total tax liability. And you're going to apply the tax rate to each income earned within that range, and then add them together. So I invite you to walk through some of these calculations I have in the gray and green shaded cells. Again, what I've done is I've broken down the calculation of the tax rate liability based upon taxable income. And then, as I said, the first $19,400 I'll tax at 10%. And as I mentioned earlier, for each respective taxable income level, I'll apply the appropriate tax rate to the income contained in that level. And then finally, these taxpayers who file a joint return, their upper tax rate or marginal tax rate is 22%. But they'll only be charged 22% that rate for income between $95,225 and $78,950. And you'll notice at $78,950, that is the top end of the previous range. Just like $19,400 is the top end of its previous range. So within each range, you'll apply the appropriate tax rate, add them all together, and that will give the total tax liability. Right? That's kind of the first major step in this problem. Once you determine the major tax liability by adding together all of the tax obligation within each of these ranges, then you can calculate the average tax rate by taking the total tax liability, in this case $12,666.50, and divide it by the taxable income of $95,225 using my altered data. The data you'll use is different, but the method is identical. Right? So that's the average or the true tax rate. So even though they're in the 22% marginal tax bracket, their true or average tax rate is only about 13%. And I can be a little bit finer with this 13.30%. So that's their true tax rate, even though, as I said, their marginal income would indicate a 22% marginal tax rate. All right, finally, number 4, this ties to number 31, where we have Sandra, a single taxpayer, taxable income of $90,000. Using the tax table, she's determined that her tax liability is. So I've altered the data on this one as well. And so if you went to the tax table, you'd look up the status of the taxpayer first, as well as the taxable income. So Sandra is a single taxpayer. So you'd look within the area of 90,000 taxable income and then use the column for single taxpayer. And then where the income column meets to the status, filing status column, that is your tax liability. Okay, so this again, you'll get some practice using the tax table as well as the tax rate schedules. Again, both of those are listed in the appendix to your ebook. If you have any questions on this assignment or any of the other questions you'll be dealing with in the Connect assignment, feel free to let me know.